Now that you can hear me. All right. For some reason, it's not coming up on my iPad here. It says the show started a minute ago, so I think this is kind of frozen. Let me just clear all these out of here and start this again. Yes, there we are. Morning, Hadid. Ali, you can hear me now? It's like when I start the show up, it says that my volume is on, but when I actually go and I start talking to you guys, apparently it goes off again. So just want to make sure that it's, yeah, it's still good there. All right, we're back in action. So looking at this whole range, just sitting in here, if you look at if you're going to use take profit model 1, let's say this was your entry right here, off that right there, looking for a range extension. You extend the range. You've already extended it right here. It ran one more time through that low, and now you're looking to see that this little fair value gap here doesn't get traded through, and this little breaker right here doesn't get traded through. Otherwise, you're looking for a higher run back into here and up to a 960. Whoa, there we go. Welcome to the 830 open. So quickly drop down to 75% or so, and then shot. Woo, my merciful heavens, look at that sucker go. We're so close to the old new high in the market. CPI numbers, man, you gotta love them. Good morning, Vittorio. How are you? That was a blast. That's what Ollie was kind of looking for. One of his scenarios was like if they just set this rocket off and just run for the highs. It's pretty close. That was very Tesla-esque or SpaceX kind of took off. Didn't quite get into orbit just yet. But wait, it's coming. That old high looks like she's in the target zone now. We've run through all these 4-hour premium levels. So let's just see if that's pointing the direction on where it wants to go. If you can get back into somewhere in here, catch this for a continuation, or look for an institutional order flow entry drill. Now you got a fair value gap above this old high. If this sticks in here, we don't get an instant retracement back down. Look for a fair value gap to form, institutional order flow, graded response for continuation to the upside. So kind of watch to see how this one is kind of panning out here. There you go. There's your first fair value gap above that. I love this. I like this little guy sitting right here. There's your institutional order flow entry drill. Now leave from here. Leave. Now I have to stop loss. You snug that up because you don't want to see it come back down if you're looking for an A level entry. That's an A level right there, right off an institutional order flow. So stop loss, you go to the base here to open, move to risk free, wait for it to take out an old high, wait for the buffer now to get above here. So this kind of gives you some support. If you can get above this candle, find support at it and keep pushing higher. It'll give you a little padding that you want to see support price and go higher. So this, we called this right here, and I don't want to see it start coming back down through the mean threshold of this order block here once we get above it. You want to see that just there. Now you're above it. I'd be just below the mean threshold. You don't want to see it come back through there. And just let it run now. You're risk-free. You're stress-free. Let it do its thing. If it comes back and gets you, you made coffee. Good morning from the east. All right, now you've got the padding, you see? Now you want to see it come back, tap the high here, or just run. Yeehaw! Look at that, perfect setup for an A setup. Not A plus, but that's as close to an A plus as you can get. 24,069. Yeah, that'll put you right up in, right there. That's the old high. Next objective is right here. Well, first objective's here, 75, 100. Then start hunting for that old high there. So are you paying yourself along the way or not? Not saying that you should, but if you're paying yourself at 50%, pay yourself there. Where are you now in your stop loss? If you've entered in here, and we gave you this before this whole thing even set up, we're looking for that institutional order flow. We talked about graded response. That was the perfect institutional order flow entry drill. Then we wanted to see it get back above this level. It does. Your stop loss moves to profit. Are you paying yourself along the way? Because if this trades back all the way through this, did you pay yourself inside this wick? Because those data points are important. You're above 50% of it, so the thought goes to, we're probably going to run the highs. But I wouldn't want to see us start eating back through this candle. So you can tap the high, leave a portion open. You can come all the way back there, fill in that thing, and just come back to the open. That's fine, but you don't want to see it come all the way through this, through here, and then start digging into that mean threshold. I would not want to see that. Now, this new down close candle, you want to see it provide support. So you want to see it start climbing like we did here. You want to see this one climb up above this level, and you start using it as padding to, or a little buffer, a little stepping stone to continue to climb higher. So there's another institutional order flow entry drill off of here. Now you want to see that keep climbing higher. Chris. Good morning, Chris. Good morning, Ali. He says, look at the 15-second chart. Yeah, I see your perfect entry right here on a 1-minute chart. We called that before it even happened, but I would love to see what it is that you are talking about. You can see this here as well. Small little change in direction. Body closes at it here. You come back, you're in it. Wait for the high to get taken. Comes back, taps it, keeps going higher. Change in direction right here. Tap it. Head down, take out this low. Close on the low. Come back inside it. Continuation on the downside. Look for a trade back into this level right here. Order block. You lose the mean threshold. Look for this to get retested. So go back to the 1 minute. Are you paying yourself in that wick? They're data points. You have to decide whether or not you want to, or whether you just want to hold this for a long term. So now we're back into this candle's high. Its mean threshold. Is it going to hold? And has this, all this has been filled in now. So now you do not want to see it start taking up this candle. Now you've got change in direction, traded back into it, pulling away. You want to see that accelerate through here, not start pulling back into this candle and attacking it again. If it starts attacking it again, think, we've done this little pop back up here. Are we running back into this, retesting this level here? You have this premium level inside this small little range here. Are we coming back to retest that? And you obviously don't want that. You want to see this candle here hold price. If it fills this in, you're still inside this small little range here. And this candle becomes important as a support level. So you want to see that right there at 006, 007, 007.75. You want to see that get taken to the upside and then keep on trucking, because this is the midpoint. This candle's mean threshold now is the point you want to see it broken to the upside and then continue eating into this wick. So those are the different data points I'm looking at inside here. This candle's been validated from below, so it's low. Its mean threshold are key targets. Now, typically, if you want to see it head lower, you want to see it just come back, tap the low, and just keep coming lower. Its mean threshold is your line in the sand if you want to go short. So you can see how you're between this candle and that candle. We had a good little love in this morning. I like the conversation, little chat was that was going on in the channel this morning about people who they found some support in a great community. So I want to congratulate all of you who are there to help each other out. Now, some people, I'm trying to figure out why some people keep saying to me, your link is expired. It's probably expired because you're in the community and hadn't participated or hadn't done anything for months. So I just went back in and cleaned up all those people that hadn't been there for months. I thought, well, they're obviously not interested in being in here, so, or they've got other things that are on their mind. So I kind of cleaned up all the people that weren't participating and just sent them on their way. If they have access to come back whenever they want. And then people are trying to get back in and they're like, it's expired, because they're on a remove list, not a banned list, but a remove list. Like I just removed this person, that person, because they're not actively participating, and they're obviously not there to get something. They're just kind of names on a list that wasn't really doing anything. So I kind of removed them and just kept the core people that are actively in the community. So it's not been a snob or anything. I was just cleaning house. And then one of the guys said, hey, man, I'm trying to get back in and I can't. I've been busy for a while and I'd like to re-engage the community. I said, oh, yeah, sure, come on in. It took me forever to figure out why I couldn't get this guy in. And then suddenly I went, okay, check a list, found the list, found the guy, removed him from the list, and hey, we're all back in. Everything's good. I never want anybody to feel like they're being eliminated from a community or we don't want you anymore. It's just, I thought I was just cleaning house, but it has nothing to do with any personal grudge or anything, just so you know. So I'm really happy that you guys are there to help each other out, and just know that the people that are in there are really good people that are just there to trade, to share what they know. And if you know something and you want to share it, by all means, pop in, and it will be well received. If it's ICT related, if you're bringing in a lot of retail stuff, you probably won't get much joy there, just because we're just a community that's learned a lot of ICT stuff, and we've engaged and embraced his principles, and that's what we're using. So Yeah, if you're a retail thinker, you're just going to get frustrated in there because these people do not think retail. They are totally embracing the ICT concept. So it's like a game show. If you have the lowest votes, you get eliminated. Well, no, I just looked at it. I was like, man, some people hadn't been in there since March or May. I think, oh, okay, well, they're obviously busy or they they've lost interest in it and haven't closed out. Well, we got people in here that are actively participating, so clean up the house. Just clean out the names that aren't really doing anything. So nothing personal. You can get back in. Now you just have to contact me. So if it's expired, it means you were in there and you're on a removal list, not a banned list. So just let me know and we'll get you back in again. Hey, Rez. Change the direction. We come back up. See now we've traded back through this level right here. Just come back and give this little consolidation, a little kiss on the top of the head, and then run through like that. Little tap. So that's another huge cam model one, but I want to see this hold here now. You have a little imbalance down here. And we're above this level right here. Let's see this all provides support in here now. Ooh, that's right through there. See that tap? It tells you it wants to get lower. Right there. I want to see it come back through there. See what this 38 seconds ends me up here. See how we've closed below that level and below this imbalance right here? And we're trading back inside. So if it starts to come back down below that low, I'll close it out. There, I'm out. I have to wait for market structure shift again though. I like that little pop above that. I wanted to see it just sit there. Then you see it go below it. You think, oh, there's the imbalance. I want to see it hold on. Pop below it. Came back up inside it. So yeah, I'm on the wrong side of that. It's going to come lower. So I'm not going to chase it and say, all right, now it's going lower. Now it's going higher. Now it's going lower. Just because it keeps bouncing around between those two. So you got to wait for a structure shift for like above here, down below here. For me to get involved in that again. But you got to be willing to take a loss if you're got an idea. So trade below here, back up inside that level, keep coming lower. And now it's too consolidated, too choppy. So break here or break here. Good stuff, Craig. So this 15-minute, if you see the next 10, 15 minutes or 12 minutes, 11 minutes, this kind of ends right here. We're doing what we talked about over here, institutional order flow entry drill. What we're looking for in a 1 minute level, breaking above old highs, fair value gap, fair value gap. This candle right here is representing this candle right here on a 15-minute chart. You see, and what we're looking for is this next 15 minutes for it to come back, give you an institutional order flow entry drill. Or just come back and tap right there off of 989. Give it a little kiss and then send it higher. That's what I'm looking for there. So we want to see this fair value gap form and stay intact. So in other words, I want to see this hold here now for the next 10 minutes. Waffle around in here. We've got the new macro beginning in a few minutes. See if we can catch this for a run higher. It's macro time again. Let's see if she starts the spool. So we have another 8 minutes to go. So if this is the, just so you know, if this is the hourly fair value gap we've got forming here, if that holds, its consequent encroachment lines up with, and I just want you all to kind of see this, just so you see, it's lining up with the consequent encroachment of the 4 hour and if you haven't marked it already in your calendars, it also overlaps. You see how you got this blue line and blue line? That whole box is the 3 a.m. hourly candle, and its consequent encroachment lines up with the same place right there at 973, 974 level. So the bottom of this institutional order flow entry drill, 974, right there, that is the consequent encroachment. That is the overlap layer of the 3 hour, the 4 hour, and the consequent encroachment of the BISI. So that 3 a.m. candle would be kind of a, if we can close above that, this is a 15-minute consequent encroachment. Tap it and take off from there. That'd be a nice little long. So we're looking for the next 4 minutes for that to end, and then we're looking for a little wick back into here. And you can tap the top of the 3M candle at 989. That'll give you your institutional order flow entry drill on the hourly to go higher, all the way down to consequent encroachment. That's a C level or B level trade. A, B, C is 75%, D is a full fill. So that'd be like a graded B level return. While we're waiting for that, see how the mean threshold of this candle has been hit versus MQ's mean threshold has not. We've talked about this in the past, this theory of key data points, not just SMT divergences, but key data points like mean threshold of that candle being hit inside the ES and it not being hit inside the MQ in Dow Jones. I don't think we even have one in Dow Jones. If this isn't in Dow Jones, it's not even close to it. That was the big takeoff candle. Oh, that's a 5-minute standby. Yeah, it's already through it here on the Dow Jones, and it's come back into it for continuation on the downside. So you want to see if this, and we've run that low out already. So you want to see if this actually eats its way back through here and gets into this immediate rebalance again. So Dow Jones has gone through his. NQ or ES is holding on its mean threshold, and NQ hasn't even come near it yet. So when you look at those key kind of data point level areas, compare how the charts, looking for SMT for the highs and that kind of stuff, but look for these key data point levels as well and see how they are supported by each one of the indices. No way, Craig. Overvalued. I agree. I think the markets are just unrealistically propped up right now. But we've been saying that for a couple of years now, that it's been overvalued, and we're waiting for it to crash, and they just for somehow keep propping it up. But there's going to be a dark day, man, when the markets turn and take trillions of dollars and fill the pockets of somebody. Anyway, the British pound, relative equal highs above you here. We got 3 triple highs here, and you have a premium box above you here around 136.57. I'll put a little line up there as an upside objective you can kind of reach for. Yes. Well, they've taken out all their highs already. 15-minute. Equal lows now. So this is equal highs, mid-bay jagged. Now you're looking for a run on the liquidity below the market here. So that's what I've been looking down there. And do you see a change in direction here? See how we've traded below this level? On a close, we've come back inside, look for a run through this breaker now. Happens to be really close to a small exchange, but look for these equal lows now in euro dollar. Little piggies. Still finding support in here. You're above this level. Come back inside here. Start pushing through. Find support on top of this inversion. Keep sending those little piggies higher. We have no breaking structure yet. Soybeans, saw this one earlier. We have a break below that low of that BISI. And now you're looking for a market structure shift right here. And you've got that. You're looking for a retap. And this can come down lower now. So I'm looking for a deeper run into this range. Look for 50%, 62, so on and so forth. So I'm looking for down on soybeans. And coffee is on the turn, coming lower. So if we get another market structure pop here, look for a deeper run back into this consolidation. CAM model 3, or at least a run down into here. I'll put a line on here. If you're looking at coffee, look for coffee to reach into here, the hourly level. Nothing in sugar yet. We've hit the bottom of our sticks yet again. That's been in the sticks for quite some time now. You can look at 74.92 and see if you can close above this. Look for 74.92 to get retested, and then run higher in cocoa. We've traded below this SIBI, change in direction for NVIDIA. We did not get a chance to trade back up into it. Took out the downside, traded back into it, then ran the lows. market structure shift. Even in NVIDIA, exact same thing. A big multi-billion-dollar business like that, and it's still acting the same way. Got to be algorithmic, eh? So far, Disney's stuck in the mud. Oil's got to change in direction. Nice little run above the highs. So Craig, if you caught that for a nice little pop up above the highs, 5 minute, looks good. Retest. Here, come lower. Wait for this whole order block here to get closed below this whole section here. So you're going to see it close below here. Start running deeper into this range. Look for this. And it's already been hit once. So if we just get a retest here, run back through that level, look for it to go higher. So I want to see it get above 63.40 and then retest that to look for range extension, or a deeper run down into 63.11. And then you've got 63.02 to 63.03. If you can get into here and you see it on the lower time frame, 1 minute, you see a reversal going on in here, catch that for a long. Then I'm looking between here and that little guy there. That's a box to box trade. And it's a gold. I wanted gold to keep coming lower. This kind of candle, I wasn't expecting a big surge back up like that on the CIP or CPI numbers. But it did, gave us a push back up, cleaned out the highs, and now finally went lower. I was looking for these lows to get taken, and they have, but I wasn't expecting this kind of punch back up there. What's the DAX up to? The DAX quickly ran out its highs. It's turned. It's choppy, not as sloppy. What's the 5 minute look like? Lows are taken. Back into the discount box here at 740, 714, 712. So we have to see if it closes below 712. We've traded below this little market structure shift here now. We're trading back into it. So I expect to see 14 or 712 get taken on the downside. If we can get back through this breaker on the upside, look for a reclaim of that and run higher. So you want to see this hold right now. And this market's closed. It's only open during London session that we can see. But they ran out the highs. You came back below them, tapped it, ran lower, took out the lows, did a range extension, came back into this order block, and this premium level inside here, and this next premium level. Come back, retested that, right at its consequent encroachment, and went higher. So unfortunately, in the Nifty, you get only like 5 hours or something like that, 6 hours, maybe 7. Let me have a look here. I think it's 6 hours. So there's 0, on the, there's 0, and you get to, it's 6 hours of trade time. That's all you get. So it may not talk, or it may not move like the other big indices, but it still reaches the algorithmic points. It just may take you a couple of days to get there because you only have 6 hours to make your move. So play in the lower time frames to get your moves inside individual hours as opposed to the whole day, because it tend to gap to the next data point in the discount or premium levels. I've noticed that about the Nifty, but we don't have anybody in here fiddling with that yet. So there's that mean threshold. The degrade. We're looking for this little pop into here now. Remember we were talking about this? Wanted to see that key level right there at 94. I think your D wanted 97, and he's got 97.7. That's right on the money there for you, Hadi. I want to be better. Oh, that's an interesting moniker. Welcome. It's an hourly inversion from the 13th. Good morning. I was hoping for a bit of a rebalance to the downside before reaching for monthly highs, but I guess not. We're right inside this 4 hour. We're inside the 3 hour candle, the 4 hour inversion, and whatever level Hadi was looking for on the 13th, I think he was looking for, is the hourly level on the 13th. They're all overlapping a kilo, and it's consequent encroachment. Is your hourly overlapping at 75 as well, Hadi? Just be careful we don't just get a tap at this and then roll over and come lower again. You want to see it. Those of you who want to go long on this, wait for market structure shift above here and this level one more time to go higher. Otherwise, thank you. Gee, look at this, you guys. My coffee is here again this morning. Thanks, G. Oh, it's so lovely. So you see how there's your first little candle. We don't have a SIBI here. There's your first SIBI. But you also have your candle, your bullish candle right here. I do like the fact that we can trade above that, come back and give a little tap right here. Look for a continuation on the upside. Pull your fib tool from inside. Look for 50, 62%. And for me, it's not bullish until we get back above here. Good eyes, Russell. Where's this? Good morning. I was hoping for a bit of rebalance. Okay, thanks. Good eyes, Russell. Oh my God, I thought ICT. I thought it was ICT. So I was watching. Watch 977 for direction. Your voice. I'm old and simple. Oh yes, sir. These busy moves up on the news tend to be powerful and usually don't get completely filled before continuing through. It can happen. 50% of the gap filled. High probability. I need a coffee. Off of my pre-market coffee at Lion's Mane. Yes, I love the Lion's Mane. I didn't bring any of that with me this week. So here's your run up inside. You've filled this fair value gap here now, the SIBI. You've traded above this one. You haven't retested it yet. This one's run up, so this is still in play. That's been filled, but it hasn't been traded through. This breaker's been hit, but hasn't been traded through. So this little tiny pullback you're seeing right now, I want to see if we can get back into this level. And if we break that on the downside, look for more of this relative equal lows below us to get tapped. This is an institutional order flow entry drill. We are well within our premium portion of this busy here. The consequent, I'd love to have seen that consequent encroachment get hit, but hey, can't always get what we want. The 4 hour's been tapped. You're inside the 3 hour, so I wanted to see that, catch that for the 3 a.m. candle long we've been looking for. Now, if is Kevin, is it Kevin? Mark? If Mark is in here, does he just take it on the top of the candle? Does he layer in his buys to take that long? Or does he just wait for the consequent encroachment to get hit and then take it from there? There's so many questions to ask about his trade setup. So if we're going to use his 3 a.m. candle with the principles that I'm kind of sticking with here on my end, I'm looking for this level, and I'm looking for any sign on a 1 minute chart, maybe a 15-second or 30-second chart if you're onto that. We'll go there in a second and see if there's a reversal here, right off this level, this level, this level, you know, all those key levels we're looking for a change in direction on, right? So there's your first one. Do I see a change? Nope. I see it right here, and I see it right here, and now I want to see a market structure shift to get confirmation with the breaker to go higher. So you have to be patient enough to wait through all of that. If you want to jump on this early and you want to catch it right off of the 499.77, you got a really great entry if that's your entry point there. I'm sorry, I don't have it marked on my 15-minute chart where the hourly is there that Hadi was talking about. So I'm just going to wait for this structure break here because I don't want this to end up being a bull trap, catching those who want to go long off of here and come back against you. So I'll wait for that, then catch a long right off the top of this guy, and look for market structure shift, continuation on the upside. It's all looking good. So okay, that's good. Give me that's good. Now freeze right there. 8 seconds. No, not just a wick. Get up there. 4, 3, come on. Look at that, right on it. I want to buy that. I'm going to go long there. Not quite a body above, but I'm going to put my stop loss just below this candle right here. I want to see this provide support, and I want to see the mean threshold get taken. I want to be, I'm technically not above that level, and I'm no body above here. It's just pretty much closed right on the high. But I do again like the body or the close above the the close above the close. So let's see if that keeps going higher now. You might get one more confirmation candle that we're just going to close above here. 15-second chart. Let's look at a 15-second chart now. I want to catch up, though. There's lots of comments going on the side there I want to catch up on. But let's look at the 15-second chart right here. When you're looking at Hadi's level that he was looking at 977 level. So if you get the 977 level, right there, it was 978 right there, 97775. So if you get that and you start to say to yourself, I'm looking on a 15-second chart for the first reversal. So you're looking for a market structure shift right here, or this reverse right here. So you see that candle close above that level and you go, sweet. Now, if we could return back into here, that's my long. My stop loss is going to sit down here. It comes back, gives you a little squeeze there, but continues going higher, or you wait for this market structure shift. There's your body traded above it. It comes back, gives it a little kiss there. Now you say, that mean threshold has to hold price. Look at that, right there on a mean threshold of that candle. Look at that. That's precision. Look there. How many times do we talk about that? Trade above that high. Wait for that last candle. I know we use all of them, but the last candle is the most sensitive. I want to see that mean threshold hold. It does right there on a tippy-tappy 15-second chart. Precision. That's not randomness. And then all of a sudden, we're off to the races. So Hadi could have caught a perfect entry there on a market structure shift, following the rules to carry that trade higher. Right there, perfect entry, exact rules of waiting for not just this, but a market structure shift and the breaker that takes out this low. So you have a breaker, trade above the breaker, market structure shift, catch the market structure shift along with the breaker after taking an old low at a level he's expecting to see a reversal at. Right there, that's your confirmation. Zero stress, he's in, and as soon as it starts to break into 50% or more of that range, you move to break even and let the rest run. And now we're looking for a higher time frame. So he's caught his lower time frame entry right here, right? And now he's looking for a run for a continuation to the upside. And now, Hadi, you just got to trust and hold on to that longer. If you're just trading internal range on a 15-second chart or a 30-second chart, you're denying yourself that opportunity to run for that higher objective. And if you're looking at your 3 a.m. touch, you're looking for any opportunity here to catch your reversal. So as soon as it taps that 3 a.m. level right there, which is, look on the 30-second chart or 15-second chart, it's right here. So you're looking for any opportunity to catch a reversal now. So you say, oh, it's right here. If I can break that level there one more time, I'm going to catch that for a long. And off you go. So if you're using the 3 a.m. entry, you use Hadi's 977 entry, you're using the 4-hour entry, you're using the consequent encroachment, you're using the institutional order flow entry drill, any one of those levels that we're all kind of looking for a level for an entry here, you get down to that 30-second chart and you look for this kind of confirmation, you have a perfect entry for a continuation to the upside, and you just sit there and move into break even now, pay for the cost of the trade, and sit back, relax, and let it reach for your higher objectives. And as that number starts to grow, this number is really going to screw with your psyche, because as that number gets bigger, you're going to be like, that's money in the bank. I got to pay myself, and then you'll take away from your objective, which is like half this wick, 75% of the wick, the full entry, or gunning for those old highs. Keep the objectives in mind. Don't forget the data points on the higher time frame, because if it reverses on you and you see the reverse coming, then you've missed out on an opportunity to pay yourself. Does that make sense? I hope that makes sense. Anyway, let's get back to the 1-minute chart here. Lines main health, yes, I agree. Beast mode partial. D, the basement looks familiar. Are you at your brother's house? Yes, I am. I'm here for another day. Going to go out and see mom and dad this morning. And then we're heading out to Carla's dad's place, and then we're driving back to Manitoba, or to Alberta. So we flew out here, but we're driving back. He's got one of those electric trikes he doesn't want. And I was like, I'll have it. So I'm going to be driving around my neighborhood with a trike. I love it, with a basket on the back. I'm okay with my masculinity. I think it's going to be fun. So we're taking that back. He's coming back to visit us. I think your brother with Michael Huddleston joke, your voice is really like ICT. Is it really? That's funny. I'm sure Michael would be quite insulted by that. But thank you very much for that. I want to be better. You never see ICT and Darren in the same room. Just saying. You never really see his face, do you? I'm all the ICT with no swearing and no upset, no anger management problem. No, that's very kind, but I'm nowhere near that dude. He's one in a million, that guy. Out hit the upside target. My ICT is stopped by the YouTube live session once or twice in the past. Yeah, he's been here. Actually, I think it's 3 times he's been in here, popped in. But I think it would just annoy him now because we're changing up some of the names. You know, you've got Crazy Ivan, and we've got Box to Box. Sometimes I'm probably calling levels that are not exactly how that he is calling it in terms of the names. So, you know, I'm not doing that just to create my own reality. I'm just doing it to make it easier for me to understand. I just look at it as a specific data point. I may get the name wrong because I'm not too busy focusing on the names. I'm looking for a specific pattern to change. So anyway, that's what I'm kind of focusing on. So I hope he realizes we're still trying to do him justice and we're not trying to reinvent the wheel here. Love it. LFG, Lucky Star. I don't know what LFG is. Lost for good. What does LFG stand for? There, Lucky. Sorry, I missed your LFG. Look at the 831 candle. I just took the top of it. As I told you guys, hold for price. What's stop loss? Yes, sir. My target was 1 minute fair value gap. 930 is coming. Look like a mentor ICT. Damn. Very impressive. Good morning. Hello, everybody. What the heck, Mark? Uncle, couldn't you explain it? What is a Mark? Marky Mark? A Mark 3? Well, I want to be better. This is not a Darrenism. It's not an ICTism that we know of. We call it the Marky Mark 3. It's a trade setup by Mark. He's one of our guys that comes into our channel quite frequently. And Mark has this trade set up, and I know he would mind me talking about it. Mark has this trade set up that has, if you go from a 3 a.m. candle to the next 3 a.m. candle, as long as the 15-minute does not close below the consequent encroachment of the 3 a.m., the whole 3 a.m., 3-hour candle, 3 a.m. hourly candle, if it doesn't take out the consequent encroachment of that, or the mean threshold of it, depends on what in the midpoint, let's say, on a 15-minute chart, he's reaching for the next 3 a.m. candle. So we call it the Marky Mark 3. Mark 3. Stick around in here because we're definitely going to show it to you more often. We've been watching it over the last few weeks when he brought it forward, and it really is a pretty amazing trade setup. So hopefully you guys get a chance to see it, and stick around long enough and you'll see it. It'll happen. Morning, Joe Mack. How you doing? Derek, the B Master. Derek B Master B. Oh, look at this sucker turning on me here. So we do not want to see it close below this level right here. If it does, that mean threshold, I don't even like the fact that we've come here, we've hit it already once, and we're wicking through it again. So that's it for me right there. I don't want to see it come back below, one tick below this low. That's it. So right there is my line in the sand. We've hit the top of this order block. It's high and it's open. You've done your thing. You come back here, you'll take me out again. And then again, we're into chop now, so that little run for higher, it's not very clean. The clean entry is the tap and go, right? Mean threshold of that wick. You got to go higher now. No, you don't come down. Stay away. That's going to take me out there. So look at this mean threshold here. Watch for a retap of this imbalance, and we're back inside this range again. You can see as soon as that starts coming back into that mean threshold right there, that's what we want to see it hit, and then leave from there and it keep going. We wanted to see that rejection block get hit, so on and so forth. This whole candle coming back into here again has no reason to do that unless she's up to some shenanigans. So it's not clean price action. I'm sorry for all of you who are new here. You're not getting to see some clean stuff this morning, but hey, we're kicking the cat. We're trying to kick the can down the road here. And this is where you go, don't play in this market. Get beat up a couple of times. You're going to get whacked through that mean threshold, come back inside that candle. Ho, big one. Holy. So that's why you keep your stop loss at a level you go, I don't want to see it do that. If it does that, it's got to act the way you want it to go, my friends. Do not overextend your stop loss. Once you see that level and you go, that should not come back there. And if it does, take the hit, move to the sidelines, and wait for a clean setup. So we are through that consequent encroachment. We're through the mean threshold of this whole thing here. Now you're looking for that D level entry, which is that fill of this fair value gap right there. Now we're looking for this one here. There's the tap. So now you're looking for any possibility for a reversal. So let's look for our 15-second chart here. So we're looking for any possibility for reversal. So what are we looking for here? Tippy tap around here, create a fair value gap here. It's not doing it. Is that the first presentation fair value gap on a 15-second? Not sure I buy that one. Retest. It's got to get back above here. Use this candle for support to come back into here. If we run through this level on a close, I'm looking for, sorry guys, you don't get your high right now. If we close below here, your high is not in the cards right now. I'm not saying it's not for the day, but for right now, if we trade below that candle's mean threshold on a close and take out this swing here, we have a market structure shift. I'm looking for this area down here. So just kind of watch that level right in here. From, I'll give you the numbers exactly, 917 all the way down to 905. 917 to 905. Let's put the box there. 917 to 905. There's the box. We'll call it the area of interest. The area of interest. And then again, you're looking for down here in a 15-second chart or a 1-minute chart, you're looking for your reversal. If you're looking for a key level, we're looking for any opportunity to see the reversal there. See how this consolidation here, that's a CAM Model 1 entry. Continuation on the downside. Are you using all of this as consolidation? If you're using the whole thing as consolidation, looking at this on a 15-second chart, for example, if you use all of this from low to high, you close below, but I usually want to see a displacement candle below consolidation. You may look at this whole thing and say, this is all consolidation for me. That's the good thing about consolidations, is you have to decide that's not, for me, that's not. I'd look at something like that as consolidation right there. Displace, come back inside, tap it, run lower, look for this discount box to get taken. And a continuation, holy smackers. So now I want to see, do we get, where are we at here? Rejection block is hit. Stretch it out. SIBI number 1, SIBI number 2, SIBI number 3. Is that in the discount portion? Let's have a looky. Yes, it is. And those of you who are new here, if you're going to be watching, there's 50%. So this is going to be 70%. Look at that. Right off 70% in the discount 1, discount 2, discount 3. So you got 3 discount boxes to reach for. You got discount 1 right at 70% optimum trade entry inside this larger range. And this breaker has not been taken yet. It's been traded in through, but no body is traded below that level yet. So you either wait for the body to trade below, or I'm looking right here for this candle to get closed above for a run back inside this range on a 15-second chart. So there's your optimum trade entry reversal. 70%. Look for, again, your change in direction. You got this candle. You're above that. Support. Look for a run above here now. Support and run back into this range. Is this the regular trading hour gap? Mm-hmm. There you go. We're above it. Let's go along there. Now, I do not want to see this get below here again, no. Ah, shit, we're through it again. Nope. We're through that level already, through the mean threshold of that level. So now I got to try and hope we can get back in there, or that's going to take me out there. Nope. Look for this regular trading hour gap to fill. This is not a good start for all our new people here. Yeah, shit, look at that. We're back inside here. Next price leg lower. Stay on the horse here, Darren. Stay on the horse. Stay focused. Let's go. Looking for, it's got to get a structure break for me to go lower now. Yeah, if you want this full regular trading hour gap to fill, we got to get below here. Yeah, we're right through that level. Came right back to it. See, now if I would have entered right at the mean threshold there, traded through it, you think, oh man, I'm on the wrong side of that. Trades back into it. Give yourself an opportunity to get out of that trade at break even. Okay. Stay on the horse here. Stay on the horse. Focus, focus. Look for this box down here now. What do we got? What are you guys seeing over here? Initially, it's not opening. Here's the big red candle. Yep, woohoo. Green short. I'm waiting for macro long. This is setting up perfect. 50% regular trading hour gap booked. Could be a turtle soup. Let's wait for price action to slow down. Waiting for the data high. SPX put. Maybe turtle soup set up. What's CB stand for? CB? Do I have CB in there somewhere? CB? I don't know what CB stands for either. Chuck Berry? Maybe. I don't know. Out. We whipped down in the open, but didn't take any liquidity overnight. The longer I spend on the charts, the more OTV I see. No, I'm short for consequences of the 3 a.m. You're short from here. Ah, right, the 3 a.m. mark. Yes, right there. But the 15-minute chart hasn't closed below there. Okay, Mark, why is your entry here? I understand that you're from the consequent encroachment there, but where's the close? You said you wait for a 15-minute close below that, and then you take it short if you're on the wrong side of the close. We haven't even finished this 15-minute candle yet. So why did you take the consequent encroachment of that? Is it because you came back and revisited the consequent, we went through the consequent encroachment here, or did you catch it right here to go short? You're using, I don't know. I'm just trying to go by the rules you gave us, which was the 15-minute one. If it closes below that, and that one's not finished yet, if that's your 15-minute or your 3-hour candle, give me your notes there, Mark. Why did you take the consequent encroachment? What was your rule for that? Because that's not following your 15-minute rule you gave us. Let's wait for the internal range to be taken. Or CE. Consequent encroachment is the CE, not CB. Yeah, CB's Chuck Berry. CE is consequent encroachment. Let's soup this low. So looking for a dig into this discount box here now. If we close below this candle and come back and retest it before hitting this, look for a retest and then come lower. So that could be a retest into the all into that candle there and this BISI, and then roll over, come back through it. If we trade through it and then back into it, then I'm looking for a range extension. And I'm looking for a run on these equal lows here. That's what I'm looking for. And you notice that you're getting into a discount inside this larger range. So in order to see a range extension and a run below here, it has to trade back into a little box for me before taking that low. So what's your, you haven't given me your rationale for that consequent encroachment, Mark. I'd like to know what that was. Because if you got another rule for that, you got to let me know what that is, just so we can show people. I want your logic to, because it's an interesting trade setup that you got. So I really want that the logic. I can see the consequent encroachment right here on the 30-second or 15-second chart. That's bang right there off that 7.9 or 973. I just want to know how you got your entry there. There's the tap on right on there. You see that? Tap right on the discount box right there. And look at that reaction you're getting off of that. So for me, I'd have to have a structure break above here before I enter into something as sloppy as this lot on a 15-second chart. On a 1 minute chart, let's see what there's on a 1 minute. So you got to wait for a structure break up there. I don't see anything clean in here. You've run out the 830 low. If this is your 830 D's 830. There's the retap. You want to go higher from there, Hadi. You took out your highs, took out your low below you. You've come back through it, tap it. Is that your continuation now? That's Hadi's 830 run. All right, so now before we fill this fair value gap, I want to see if this trades back into this candle here at, where is that level? At 395. Nope. We're digging straight into it now. So there's your discount box hit now. There's constant encroachment of that. I'd love to see that kick out of here now and go higher. Start at least digging back into this candle's consequent encroachment, the Mark 3 on the 3 a.m. candle. You got 3 a.m. candle here and a Mark 3 a.m. right there as well. If we come back into the consequent encroachment of that at 944, that'll put you right in the consequent encroachment of this last down close candle breaker to come lower and see if we can get through here. So let's keep your eye right there at 945. So back testing any large range more before 9:30 on news, I noticed the will happen faster on the lower time frame. We may still see them move on the 50-minute, but I look on the 5. Oh, so you're on the 5 as well. Where's your 5 then? If this is your retest on the 5. Okay, here's your retest on the 5. He's traded below it here on a 5-minute. So we can do a 5-minute then, not just a 15. See, here's that flexibility we need to know. Rigid rules, man. That's what we need to know, the rules. So it's not just 15. It could be 5 as well. Could it be 1 minute? 1 minute's there as well. If it closes below it, 1 minute can really mess around with it because that's really detailed. That's nice and clean. Retest. Get that. 5-minute. All right. It's something I'm going to have to play with, I see. Thanks, Mark. Wait for market structure shift, Darren. Took midnight level. I'm looking for a long, monitoring a 937. Sibi and swing high. We've taken this low here. We've hit this nice little discount box. I'd like to see this market structure shift. We can get back through that 48 level, and then you'd have to get back through that. Yeah, you'd have to get market structure shift here. Yeah, you got to write down the rules, Mark, so we can understand them. And they've got to be as rigid and yet flexible like the algorithm. So you got to have something that says, like I have a fail safe at a specific point. If it fails at a certain level, I'm out. Like that's my fail safe. If I got one on the wrong side of this, and then I can catch it on the wrong side, my fail safe's there. My stop loss would be one tick below the low. If it runs on me real quick, then it takes my stop loss. That's what I'm willing to lose. But my fail safe is that specific data point. So I look for specific data points as a fail safe. And I know it changes direction if it breaks that specific point. That's the whole reason behind why I developed the fail safe as a means to see whether or not you're on the wrong side. So yeah, give us some nice solid rules around your entry, Mark. And they're tested, they're proven, they're solid. Then we've got something we can follow, because people want some rigidity, and if they see that you can say, oh yeah, it does work here and it does not so much here, then people don't rely on it much, and they miss out on an opportunity to see something that you really have something special there. So if you could tighten those up, that would be awesome. That'd be awesome. Because I want to give your trade all the respect that it needs, because it clearly works for you. That's like anything, though, isn't it? Everything comes under scrutiny, and people's opinions, people's belief patterns about what they see in the market. And if you can't prove it over and over and over and over again, then you start to lose your audience, so to speak, right? So stay on the horse here. Where are we at? We've hit our downside box, we've hit our discount range, and we're getting a kick. So we want to see, we've retraced back into here, and we've eaten through the mean threshold, and we've come back into that BISI that we talked about. Remember I said I wanted to see it come back into this candle, and it can touch this BISI. Go back through the tape, you'll hear me say it. We've tapped it, and now we're getting a nice reaction off of that, right? That's what we wanted to see. Now you want to see it push through that candle below us here, or this box below us. Use that box of support to run the lows out. And look at that. It's doing exactly what we said. That's right to that level. There's Mark's 30. There's consequent encroachment again, right there at that level. Did anybody get short there? I didn't. But it's a level we called. Now that whole discount box has been filled, right? Now we want to wait for a body to break through that. So look for these equal lows below you. And what do we got next? Let's go to this 1 hour here. I want to see what the 1 hour has got in store for us. Ah, yes, that was the 1 hour right there as well at 911. I like 911. So 911, if we can get through 911 on a close on the hourly, and we still got another 8 minutes left, we can close below that, look for this retest of the SIBI for a range extension and these lows to get taken. And if we get through this level, we're not going for new highs yet. We're definitely not going new highs. We're going back inside this range again here. And where are we headed? I'd say 873. Look for 873, 866, 873, 866. Write those down. And then 873, 866. lost my change in direction, wait for a structure break above here. If that's all you got is you've tapped that discount box and we snap away from that, that is not a structure break on the hourly, and that starts to reverse it and then start hitting higher. Again, you want to see it break above that breaker, but here's the start. Change in direction, body above it. That's a nice little run higher right there, right at a 9, right coming up for it. Look at this macro. I'm going to go long there. I like that. Right off that macro, and I'm going to put my stop loss just below here. That'll be my last attempt trying to get this run here. I like this. And I haven't got a market structure shift. I know that. So I want to see this hold and go higher. And I'm counting on this. Oh, shit. Oh, look at that. It took me again. The body traded below. We're below. It's coming to get me now. Shit. Oh, my God. Wait for structure break now, I guess. Damn it. I was like, that looks good. It's a nice macro time. It's a nice fair value gap. It's swept a low. It's hit the discount box. Come on, you're going to go higher now. And wait for structure break. Damn it. That's 3 big hits in a row. You guys are going to be like, this guy doesn't know shit. He doesn't know what he's talking about. Oh, that's hilarious. Okay, so now we've traded below that level. Now look for range extension. It's still not done down here yet. Oh, how funny is that? Wait for the rules, man. Follow all the rules, not just some of them. Oh, man. It's getting beat day today. Hadid's like, oh, man, just follow the rules. Follow the rules. So wait for structure shift here now. We're coming back into this little sippy right here. This little inversion. You won't get any new followers with this kind of crazy trading, Darren. You're not going to help anybody out not following the rules. Follow the rules. Where's my phone? I'll be right back. I gotta get my phone here. My phone's in my room here. What's that? What was it? That's my phone. I got my different alarms set for different market times. Check Carla when she came up. Oh. Okay, you guys. Let's try this. For some reason, my iPad is not charging. Well, I've got it on, so. All right, there we are. Let's get to keep up with you guys now. Lucky Star, stay disciplined. Yes, you can see how if you get too excited about your not following the rules, you can get beat up. And yes, I can take hits, man. I can take hits, and I do get my impulsiveness as well. So at least you get to see the winners and the losers. I'm not hiding anything from you. You even get to see the impulsiveness and the full. That was the full, like, yes, let's go for it. And then you see it run through. It's like, oh, you're on the wrong side of it. Now, let's look at this and say, let's say I was really following the rules. And here's how the fail-safe, my fail-safe works. And I didn't use the fail-safe rule as well. So I saw this and I saw that, okay, we've traded above here. I'm like, yeah, I'm getting in right there. Where would be a better place for me to get in? It would be right here at the very bottom of that. I trade through and I go, I'm on the wrong side of this. So my stop loss is sitting at the low, right? The rule is put your stop loss below the low, and that's the ideal entry for a long. And if you're wrong and it trades back to you, because you've closed now below that level before taking the low, it trades back into you, gives you an opportunity to get out of your trade and wait for a market structure shift. So that's the fail safe right there. You got to take the full loss, or you wait for the price to trade back into you, get you out of the trade before it takes the low, because that's what we typically like to see, right? We want to see it trade below the low, below the SIBI, trade back into the SIBI, and then run down and take out the sell side liquidity, the rejection block, half the wick, the three different points you look for, and then look for range extension. And if it trades back through it again, you look for a continuation on the upside. So we don't want to be getting beat up inside a consolidation of it's lower, it's higher, it's lower, it's higher. So you wait. If you left your stop loss sitting down there, like if I would have put my stop loss below the low, we'd be back into profit again now. So again, there's different ways to look at it and say, well, yeah, you keep chasing these data points. Believe me, when they're precise, they are like killer. So now we got to wait for it. Now we're above that level. I want to wait for a structure break above here and then use this as support. So even if I would have put my stop loss down here, I still got I would have gone, still be on long, but it doesn't matter. I got a hit. You need to see me take losses as well. Yeah, that 1 hour is nice right off the SIBI there. Now we want to see this premium little level right there inside this small range get cleared. Now I want to see us come back to, what's the low on that candle right there? 93.25, 93.25. And if we close above the breaker again, that would be right there. The Mark III, come back into, are you now using Mark? Are you now using this consequent encroachment on the Mark, on your 3 o'clock candle to run for the next 3 a.m. candle? And then if you get through that, continue to the upside. See how we've traded above this level now on a close right here? We've come back and tapped it now. I want to take that, but again, I want to wait for a decent structure break, so I'm going to wait up here. That one's traded above there. Come back, give that a tap. Let's go long there. Equal highs. We've traded above it. There's your first structure break. Let's see this keep pushing higher. So now I do not want to see this mean threshold right here get closed below. Stop loss, going to go 1 tick below this candle. I want to see this stay open as a breakaway gap and keep pushing higher. Pay yourself at rejection block. Let's follow all the rules now. Rejection block, pay yourself. And I'm gonna leave this down here below that candle. I don't want to see it come all the way back down into here now. I want to see that just leave. It's done its business down here. I want to see that stay open. These highs have been retested. Now you want to see that start getting up above this consequent encroachment here of that wick. See, it's hit the wick right there. I'm getting a bit of a wiggle on there. Let's go. I want to see that push through. Got to stop right there. Keep going higher. There you go. Just keep coming. It's right off the mean threshold of this wick here, or this candle. Keep coming. Keep coming. Now watching here, I'm watching to see how it acts here. If it's strong, it's got to leave. It's got to keep going. Get up on top of this candle. Use this candle as support. Now we validated it. I want to see it get on top of it. Use it as support, as to propel it higher. Good call, Mark. If you got in, Ollie got in there right off the top of that. Good call. I got a little punch drunk there. I got a little punch drunk, so you want to see that hold. Don't start drilling through it. See how we're coming back into this thing again? Not a good sign. I don't like seeing that. I want to see this tap the high, it's open and go. Not drilling all the way through them again. Come on, get up there. You got 976. I'm going to move to break even. So it's a zero stress trade now. We've already got some money in the bank. We're going to offset some of our losses that we took this morning. I should have paid myself right there. So we're coming back and revisiting this candle again. You don't need to revisit it again. I'm going to pay myself one more there. Mean threshold holding. Gotta go, gotta go. Get above that candle right there in this high. My stop loss is going to go below this low. That candle's been worked now. I don't want to see it get worked anymore. Right there. I want to see this candle's get close above this candle's high here now. Start getting up above this candle's high and that candle. No more wicks. See how it's coming back in there? Not a good sign. Don't like to see that because now it can take me out. That's fine. That's not acting the way I want it to act. So we got some money out of it. If it turns on me now, I'm glad I got out. See how that candle gave way? So now I'm back inside this range here. We come back into this candle's wick and its body. Now this candle's been validated from below. So now we're back inside that range. And look at that. Feels good, hey? Pay yourself along the way. Move your stop loss to break even. Demand a certain level. If it gives it away, then Move to the sidelines and wait. There's a retest of this. Let's see that push higher again. So this is what I used to call buffering. Buffer any losses that you would have taken down here, have it holding a stop loss down here. You paid yourself on the way up. If it comes back, start your trade all over again and start pushing higher. You got relative equal highs above you now. It's too choppy. This is like not clean price action, you guys. Not clean at all. So wait for a structure break above here now and use these two equal highs in this candle for support to keep pushing higher. If it doesn't, if it just comes back into this candle right there, like we just talked about, it would come back, find support at that, keep pushing lower, look for this fair value gap below you, and a retest of this SIBI down here. What is your downside objective for DAX? For DAX, let's look at DAX, my man. Okay, so we want to see this level here we've been sitting on for 4 hours. We came back, found so much support at it, ran through it, finally took out the high on a close. You come back inside it, find support, and you want to see that push higher. Rejection block, pay yourself at rejection block. Took out this old high here. You got to the consequent encroachment, 75%. You got relative equal highs, change in direction. Right there, change direction, had a run back up. There's your entry for a short. Now you want to aim for rejection block, pay yourself, wait for this level here to get closed below on a 4 hour at 673. Wait for it now. If it closes below there in the next 2.5 hours and comes back into this level, we're looking for a run on the lows. Where am I looking for? I'm looking for a consequent encroachment of this wick, the wick's bodies, these relative equal lows below you, and then look for a run on these, the wick, the low. So there's multiple data points, but each one of those, I'll be looking for a retest of this level right here before it takes out that low. You don't want the low to get taken out before it comes back and retests this on a 4 hour. So now get down into your 1 hour chart and say, how long do I want to wait for that to happen? No. Okay, so 1 hour right there. That's a continuation right now for a run to 622. 622. That's the next downside. My downside objective would be 622. $622. That's the next downside for me. Ali. Was it Ali that was asking about that? Yeah, 622, buddy. And if you get through that on a close, come back in and find some support at it. Look for a retest all the way up to 712. And then push for this low here. That's what I'd be looking for. Yeah, they're overlapping a D, hey? That discount box to premium box, there's a box to box trade for you, hey? If you're looking for that reversal right here, any reversal in there, this happens to be this guy. That's the one I wanted to see run up there and take that, get back up into that premium. I should have left my stop loss sit below the box. Now that I think about it, I should have let it sit below there. Would have come down and give me a good squeeze. Kept going higher. That's okay. The logic is there. The rationales are there. And my rules are a little tight in this particular situation. I'm okay with that. See now this, you don't want to see how we've come back and revisited to this last up close candle right here in this little breaker that takes out this low. We've come back, we've retested it. You see it break through here. Now I want to see this. There's no reason why I should be coming back down into this again. Go, head out of there. So we get a small little change, come back inside, look for another run down into this box here. Are we going to retest the mean threshold of this candle now? We got to get above, on a close, you got to get above 964. Get above that on a close, not just a wick. See how this is becoming pretty choppy and sloppy in here? You got 14 seconds to get up there. Right there at 969. There's another little tiny imbalance up there. There you go. Come back and give this a little tap at 964 now. Then stretch this out and you'll see the other one sitting right in here. Right there. 964, let's go. There's 964, all the way down to 961. That's it, snap off of it, go, go, go. We traded above 964, we came back to 964, we're running up and through the wick. Let's go, charge away, let's get on top of this regular trade, these regular highs here, or relative equal highs. Little pop, let's go. Let's go. Give this a retest right here if you want. I'll take that as well. 969. Let's go. Head higher. We're at 16, 17, 18 candles now. So 17 should run a high. 18 will give us a nice retest. Come on, run the highs. Right here, as long as we stay above 969 on a close. Oh, we didn't. We just ran out this high. Look at that, right below it. Closed on it. Now you're looking for this level again. See how we're ripping through them? Wow. Not acting the way you wanted to act. I agree with you, Ollie. Don't like it either, man. This is not clean price action, that's for sure. That's a shame because anybody who was here new today didn't really get the benefit of seeing some clean price action. They get to see some losses. So hopefully it didn't influence their popping in to see us again tomorrow. This is the consequent encroachment of the 3M. It's going to be tough. This is the sell setup we talked about. That's the sell. So off of here, you see how this is, if this is your 3 a.m., and that's your sell setup, what about this 3 a.m.? Because you're between 3 a.m. candles now, Mark. When they're that close, how do you treat them? So you're between this consequent encroachment, you've closed above this one, and you've closed below this one, right? So which one do you treat, and which one do you wait for? This would be like waiting for market structure shift, right? You'd have to say it's got to get through this one, come back to here, and use it to go lower, or it's got to get above that one, come back to this, and use it to go higher. Like when you've got two of them literally over the top of each other like this, how do you treat it? How do you treat the consequent encroachments now? For me, I'd have to see the logic that I'm trying to build on your theory here, or your trade setup, is for it to get above here, come back and use this as support to push higher, which pretty much coincides with breaking this structure to the upside, using it as support to push higher as well. See what I mean by those rules? How do you just decide which one of those rules supports a continuation or just to sit back and do nothing? And see, this is just chopping around in here. So for me, it's not even worth playing in anymore. Well, you can see, I want to be better. You see, you see, it wasn't my day either. It wasn't my day either. So don't feel bad. Don't feel bad, man. It happens to all of us. You got to stick firmly to all the rules, not some of the rules to suit your trade. And I showed you some good examples of if you don't follow the rules, all of the rules, not just some of them, you can get beat up. And let's face it, this is not a clean trade day. That is not clean entries. You had a nice clean entry, but then it went all choppy on you again. Don't bother. There's still a couple more days left of the week. So wait for this afternoon. There's this afternoon to go for it. It may clean up this afternoon and give you another entry. If you've taken a couple of hits, take the rest of the day off. Get yourself refocused and come back into this with a fresh mindset tomorrow when you have these optimum trade times, 9, 10 o'clock, to catch a better trade. And let it go. Go enjoy your day. Don't sweat it. Don't let it eat away at you. That's the key, is making sure you're patient enough to wait for that ideal entry. So look for this. See, you've got to wait for this right here at 996 to get closed above. You've got one that wants to go lower, and this one wants to go higher. So your ideal place would be like, if you want to go lower, would be here. If you want to go higher, your ideal entry is right there. But you have to break above that, come all the way back down inside that to go higher. And your macro is, why does that keep telling me the macro is kicking in? D says the long is coming. There you go. There's a trade about. Now I'm going to go long. That's broken above that structure. I talked about using this, so I'm going to stick with that. I'm going long right there. I like we've broken structure with the body. Come back, find some support at this. I want to see that go higher. Now, again, this is choppy market, so don't follow my trade because clearly I'm not hitting 100. I do like this though, and I'm going to stick with that as a trade plan. Now this breaker here. I just want to see the wicks get hit. That's it. I want to see a down close candle form and then another, use it as a propulsion, continue going higher. So that's the down close candle. See it start to push up through here. Get up on top of this, then I'll put my stop loss right at the low of that candle. I'm going to put this stop loss here, right below this one. Get on top of that now. So it's not getting the, I want it to start accelerating here, not this constant retapping down. Let's go, get up there. That's it for me. I'm going to go to break even. I don't like that constant tap. Let's go. You got to accelerate through here. Not doing it. See, you don't want that. That's why when you see this, you see it tap, you want to see it go, get on top of it. It's not getting on top of it. Get out. It's not acting the way you want it to get. Still got to wait for this 993 to 996. It's got to get up on top of here. Ideal, it's got to break this here. So on a 5-minute chart, you want to see 24.14 on a close. Sorry, 24.10 on a close. To 9 a.m. Fair Value Gap. Yeah. I agree, Hadi. You got an overlap here of this one supporting price to go lower. You got to get above that, and you got to get above this. Yeah, I see you, Hadi. And there's, see how we're getting above this, and you want to use this as support to go higher on a 5-minute chart. So that there is where you want to see it accelerate from here on a 5-minute chart. So all the way back into here at this mean threshold, it's got to accelerate through here now. It's got to get through that mean threshold of this candle here and push to start getting on top of that, because that's just finding support off that candle, that mean threshold. That's a typical propulsion. You want to come back, find support on it, and keep pushing higher, right? Well, you got above it here. You've come back, find support at it, and you want to see it propel. Yeah, there's no rush. There's I was trying to pick something out of here, but it really is chopping around in here. It's not clean at all. Very hard to call this because it's so choppy. But this afternoon I will make back whatever I lost this morning. I made a small chunk back. I've got 2 more losses I gotta get through today. Let's see what 11 o'clock does now. I'm wondering if we get another run on this liquidity here before going higher. Like if we retest this fair value gap down here. Who knows? It's too choppy right now to play in. Yeah, I think that's the pivot point right there, Hadi. Is getting above here on a 5-minute, which will also be above here on the 15-minute. And that 1-minute bull trap, you want to get above that and use that as support too. Okay, why the hell does that keep doing that? It's not a macro time yet. Okay. I think that's going to be it for me. This is just too choppy, and it's just going to tempt me to try and work my way out of this, and it's just not worth that. So right now, so I'm going to wait till this afternoon for something cleaner to set up, or after 11 o'clock. Maybe I'll just wait here till 11 and see if this is the all-time high fair value gap on the 4. Just happens to be the 3 a.m. It's going to struggle before going higher, in my opinion. Yeah, there's your 4 hour, and it's right in the consequent encroachment of your 3 hour candle, and you're wicking to get up in there, and you're just not closing above that on a 15-minute chart to go higher. And your 3 hour, 3 o'clock candle for today is sitting right here. So you're really banging between the two. This one here, you've traded above it, and you're just kind of hanging on here. So unless we get a trade back above here and onto that 975 again, following your rule, Mark, or at least the rule I understood, you'd want to see that continue pushing higher from there. Yeah. So you want to see it close up here. And you got 7 more minutes yet, so. I'm going to wait for this PM session here. It's too choppy for me to play in, and I'm going to continue to make more mistakes in front of you, and I don't want to do that. I want you guys to see more clean setups, not these attempts at trying to bedazzle you with perfect entries. So stick to the rules. I hope you guys have a fun rest of your day. I'm going to go see some family and try and get back in here. I might tap it in again this afternoon on the channel there and have a little chat with you guys. If not, I'll see you guys tomorrow, bright and early. My apologies to those of you who are new this morning. Trust me, don't trust me. You haven't seen me really prove anything here this morning other than you got to be patient and stay out of these kind of markets. Follow the rules. All of the rules. Otherwise, you saw a great example of getting beat up in the market if you don't. So I'm okay with that. You know, I'm pretty confident about what we do, and you guys get to see some violations of the rules and the consequences you will pay, especially in high resistance markets like this. It's designed to beat you up, so you got to be careful. Stick to patience and follow the rules, man. Follow the rules. We will, I'll see you guys in the Telegram channel for a little chat a little bit later. But until then, have a great week or have a great day, and I will see you bright and early tomorrow morning. Thanks for tuning in.